Bitcoin price drops below 118.5K. What's next for crypto? In a stunning turn of events, Bitcoin has dipped below the $118,500 mark, triggering alarm bells across the cryptocurrency world. This decline comes as traders and investors brace for two major macroeconomic catalysts: the Federal Reserve's upcoming policy decision and fears surrounding steep U.S. tariffs set to take effect in early August. The situation is creating a perfect storm of uncertainty that's shaking not just Bitcoin, but the entire crypto market. But here's where it gets controversial. How much of this turbulence is driven by actual market fundamentals versus psychological factors? Let's dive in. On Wednesday, Bitcoin saw a fresh wave of selling pressure, shedding 0.45% to settle at 118,446.5. While this might seem like a minor dip on paper, it's significant because it reflects growing anxiety among investors. Despite a stellar performance in July, the flagship cryptocurrency is now caught in a tug-of-war between profit-taking and broader economic uncertainties. Traders are wary of potential ripple effects from the Fed's decision and the implementation of hefty tariffs, which could reshape global trade dynamics. One key area of focus has been the $120,000 resistance level, a psychological barrier that has historically acted as both a ceiling and a floor for Bitcoin prices. Recently, even a massive acquisition of 21,021 BTC, worth approximately $2.5 billion, by even strategy wasn't enough to propel Bitcoin higher. This lack of momentum suggests that investor fatigue and risk aversion are starting to dominate sentiment. Could this be the beginning of a prolonged bearish phase, or is it simply a temporary correction before another upward surge? The Federal Reserve's rate decision looms large over the financial markets, including crypto. Analysts widely expect the central bank to keep interest rates unchanged during its July meeting. However, opinions diverge sharply when it comes to predicting the Fed's long-term strategy. With President Trump advocating for rate cuts and signs of an economic slowdown gaining attention, the path forward remains murky. Does the Fed prioritize inflation control or economic growth? The answer to this question could have profound implications for risk assets like Bitcoin. Adding fuel to the fire are the impending U.S. tariffs, which range from 15% to a staggering 50%, scheduled to kick in on August 1. These measures are designed to address trade imbalances, but also carry the risk of escalating tensions with major trading partners. While tariffs don't directly affect cryptocurrencies, they contribute to a climate of uncertainty that tends to weigh heavily on investor confidence. Volatility across risk assets is likely to increase as traders recalibrate their portfolios in response to shifting geopolitical and economic landscapes. Meanwhile, whispers about a White House report detailing the U.S. government's Bitcoin holdings have added another layer of intrigue. Speculation is rife that the report may clarify whether the U.S. plans to establish a strategic Bitcoin reserve, akin to its gold reserves. Such a move could either legitimize Bitcoin further or spark debates about government intervention in decentralized finance. And this is the part most people miss: the subtle ways institutional involvement can shape public perception of digital currencies. Bitcoin's downturn hasn't occurred in isolation. It's reverberated through the altcoin market as well. Ethereum, often seen as the second pillar of the crypto ecosystem, dropped more than 2% to $3,781.5. Other prominent altcoins followed suit, with several recording notable declines. XRP fell 0.6% to 3.1290. Solana slid 2.1%. Cardano retreated by 1.6%. Dogecoin slipped 2.2%. Trump coin took a bigger hit, shedding 2.6%. These synchronized movements highlight the interconnectedness of the crypto market, where a shift in Bitcoin's trajectory often pulls other assets along with it. Analysts warn that volatility indicators are tightening, suggesting that a major price swing could be on the horizon. As the market waits for clarity from the Fed and broader macroeconomic developments, patience, and perhaps nerves of steel will be required. So what do you think? Is Bitcoin's current dip a buying opportunity or a warning sign of deeper troubles ahead? Do you believe the Fed's decisions will ultimately benefit or harm the crypto market? Share your thoughts in the comments below. We'd love to hear your perspective. Bitcoin momentum loss, pre-FOMC de-risking or trend change. Warning, don't mistake Bitcoin's pre-FOMC jitters for a trend reversal. As Bitcoin's price hovers within the tight 117,000 to 120,000 range, some analysts are sounding the alarm, predicting a potential slide to $114,000 or even $110,000. But here's where it gets interesting. This week's early price weakness might not be the start of a downtrend, but rather a cautious de-risking move ahead of Wednesday's highly anticipated FOMC meeting and the White House's revealing update on its crypto policy and strategic Bitcoin reserve. Key takeaways. Bitcoin's price compression, as indicated by the narrowing Bollinger Bands, suggests a significant range expansion is imminent. The current price dip is likely a result of traders reducing exposure before the FOMC announcement and the White House's crypto policy reveal. A calm before the storm, understanding Bitcoin's price compression. Over the past 3 weeks, Bitcoin's intraday volatility has plummeted by nearly 45%, with its daily high-low range shrinking from $4,200 to $2,300. And this is the part most people miss. Such periods of consolidation often culminate in a strong directional move. The upcoming FOMC minutes, coupled with potentially bullish news from the White House crypto report, could be the spark that ignites this move. Decoding the market's expectations. The CME Group's FedWatch tool indicates a 98% likelihood of the Federal Reserve maintaining interest rates within the 4.25% to 4.5% range, despite President Trump's pressure for an immediate rate cut. Federal Reserve Chair Jerome Powell is expected to reaffirm the central bank's commitment to data-driven decision-making, leaving the door open for future rate hikes or cuts. A week of high-stakes announcements. Wednesday's schedule is packed with FOMC minutes, the White House's crypto policy and strategic Bitcoin reserve update, quarterly earnings reports from Meta platforms, Ford, Robinhood, and Microsoft, key U.S. economic data releases including non-farm payroll, PMI, GDP, consumer sentiment, and the ISM report on manufacturing and services. The billion-dollar question. Will positive news from the White House and a status quo FOMC announcement be enough to trigger a breakout above $122,000, or will Q3 seasonality dampen the rally? Food for thought. Do you think the White House's crypto policy will have a lasting impact on Bitcoin's price? Share your thoughts. Will it be a game changer or a non-event? Disclaimer. This article does not constitute investment advice. All investment and trading decisions involve risk. Conduct your own research before making a move.